Position sizing is a crucial aspect of security trading that involves determining the appropriate size of a position to take in a particular stock or security. It refers to the process of determining the number of shares or contracts to trade based on the trader's account size, risk tolerance, and market conditions. The purpose of position sizing is to minimize the risk of loss and maximize the potential for profit. Position sizing is mathematically calculated using various methods, including the fixed ratio method, percentage risk method, and the Kelly criterion. The fixed ratio method involves allocating a fixed percentage of the account balance to each trade, while the percentage risk method involves calculating the maximum percentage of the account balance that can be risked per trade. The Kelly criterion is a more advanced method that takes into account the probability of success and the potential reward of each trade. The importance of position sizing cannot be overstated in stock trading. It helps traders manage risk effectively, which is crucial for long-term profitability. Proper position sizing ensures that traders do not risk too much of their capital on a single trade, which can lead to catastrophic losses. It also helps traders maintain discipline and avoid emotional trading decisions. One of the pros of position sizing is that it helps traders achieve consistency in their trading performance. By keeping the size of their positions consistent, traders can better manage their risk and avoid impulsive trading decisions. Consistency is key to long-term profitability in the stock market. One of the cons of position sizing is that it can limit the potential for profit. By reducing the size of their positions, traders may miss out on significant gains when a trade goes in their favor. However, this potential downside is outweighed by the benefits of risk management and long-term profitability. Profitability factors that traders should consider when implementing position sizing include their trading strategy, market conditions, and risk tolerance. Traders should consider their trading strategy and the types of trades they will be making when determining their position size. For example, a trader who specializes in day trading may take more trades per day, with smaller position sizes to minimize risk. A trader who focuses on longer-term trades may take fewer trades with larger position sizes. Position sizing should be used in every trade to manage risk effectively. Traders should determine their position size before entering a trade and adjust it based on changing market conditions. By incorporating position sizing into their trading strategy, traders can increase their chances of long-term profitability while minimizing risk. Live demonstration. This procedure demonstrates how to utilize the Walk Forward Algo Trading tool to implement position sizing using both the Kelly criterion and the fixed ratio method. The tool allows for continuous forward and back testing of a built-in strategy, while providing important information and trade details. Position sizing is crucial for managing risk and optimizing profitability in trading. Step-by-step procedure. Open the Walk Forward Algo Trading tool. Open the tool on your Think or Swim trading platform. Access the Settings panel. Bring up the Settings panel by double-clicking on any red or green shaded area. Strategy Indicator. Enter Yes to switch on the strategy indicator. Risk Capital. Enter the total amount of capital you are willing to risk. Max Risk % Capital per trade. Enter the maximum percentage of your risk capital that you are comfortable risking on each trade. This determines the level of risk per trade. Stock Quantity. Set the stock quantity to 0 for dynamic position sizing. Values larger than 0 indicate a fixed quantity instead of dynamic position sizing. Understand the Label panel. Familiarize yourself with the Label panel displayed at the top of the tool's screen. This panel provides important information about the strategy and its performance, including number of shares, displays the number of shares being traded. Position sizing status, indicates the current position sizing mode being used. Volatility, represents the measure of volatility of the strategy. Median profit and median loss, shows the median profit and loss. Backtest days indicates the number of days covered in the backtesting phase. Backtest and forward test win rate shows the win rate, percentage of winning trades, during backtesting and forward testing phases. Backtest and forward test break-even win rate represents the break-even win rate, percentage of trades at break-even, during backtesting and forward testing phases. Backtest and forward test profitability displays the profitability percentage of both the backtesting and forward testing phases. Profitability is the difference between the win rate and the break-even win rate. Daily profit loss displays the daily profit or loss achieved by the strategy. Backtest and forward test risk-to-reward ratio shows the risk-to-reward ratio of both the backtesting and forward testing phases. Backtest and forward test Sharpe ratio represents the Sharpe ratio, a measure of risk-adjusted performance of both the backtesting and forward testing phases. Closing the settings panel restarts the continuous forward and back testing of the strategy to execute trades. Monitor position sizing details. As the tool performs forward and back testing, pay attention to each trade transaction label. This includes trade entry price, the price at which each trade is executed. Quantity of shares, the number of shares allocated for each trade. Limit price, the price at which a limit order is set. Stop-loss price, the predetermined price at which a stop-loss order is triggered. Risk-to-reward ratio, the ratio between the potential profit and potential loss of each trade. Win rate, the percentage of winning trades. Break-even win rate, the percentage of trades that break even. Sharpe ratio, the risk-adjusted performance of the strategy. The position sizing uses the Kelly criterion for low-risk trades and the fixed ratio method for high-risk trades. Review the position sizing status and the number of shares traded in each transaction. Compare the backtest and forward test profitability, win rate, break-even win rate, risk-to-reward ratio, and Sharpe ratio to evaluate the performance of the position sizing strategy. Adjust the risk capital and max risk percent capital per trade inputs to optimize the position sizing strategy for your risk tolerance and trading goals. In conclusion, using the Walk Forward Algo Trading tool to implement position sizing can help manage risk and optimize the performance of your trading strategy. It's important to test and adjust the parameters to fit your specific trading strategy and risk tolerance. Summary FAQ. Here are some frequently asked questions, FAQs, that highlight the ease of using the Walk Forward Algo Trading tool for position sizing. Question: which platforms support the Walk Forward Algo Trading tool? It is only available for the TD Ameritrade Think or Swim platform. Question: where can I find the Walk Forward Algo Trading tool? Available at www.werner-tools.com for $25. Question: does the candle bar timer support Windows 10 and 11 operating systems? Yes, it is available at www.werner-tools.com for $5. Question: is it difficult to set up position sizing in the Walk Forward Algo Trading tool? No, setting up position sizing in the tool is straightforward. You simply input the risk capital, max risk percent capital per trade, and set stock quantity to 0. Question: can I use both the Kelly criterion and fixed ratio method for position sizing in the tool? Yes, the Walk Forward Algo Trading tool supports both the Kelly criterion and the fixed ratio method for position sizing. It combines the strengths of both methods to achieve optimal results. Question: how does the tool continuously forward and backtest the strategy? The tool automatically performs both forward and back tests of the strategy. It evaluates the performance of the strategy across different time periods, allowing you to assess its consistency and adaptability. Question: does repainting affect strategy performance? No, all repainting occurs prior to issuing the buy signal. Question: what information does the label panel display? The label panel at the top of the screen provides important information, including the number of shares, position sizing status, volatility, median profit and loss, backtest and forward test profitability, win rate, break-even win rate, daily profit/loss, risk-to-reward ratio, and Sharpe ratio. Question: can I review transaction details for each trade? Yes, the tool provides detailed information for each transaction, including the trade entry price, quantity of shares, limit price, stop-loss price, risk-to-reward ratio, win rate, break-even win rate, and Sharpe ratio. This allows for a comprehensive analysis of trade performance. Question: is it easy to evaluate the position sizing strategy's performance? Yes, the Walk Forward Algo Trading tool simplifies the evaluation of position sizing. You can compare profitability, win rates, risk-to-reward ratios, and Sharpe ratios between the backtest and forward test results to assess the effectiveness of your position sizing approach. Question: can I adjust the risk capital and risk percent per trade inputs? Absolutely. The tool allows you to modify the risk capital and max risk percent capital per trade inputs, providing flexibility to customize the position sizing strategy according to your risk tolerance and trading goals. Overall, the Walk Forward Algo Trading tool streamlines the process of implementing and assessing position sizing strategies. It offers a user-friendly interface, detailed trade information, and robust evaluation metrics to facilitate efficient position sizing optimization.